Hi everyone, Lisa Haven here, and I've got a huge report to share with you. But for starters, America isn't prepared. They aren't prepared for what could be ahead in the very near future. And I'm talking about a trade war with China. Not only that, but economic turmoil. And so many things are on the tables. We have the Feds raising or aggressively raising interest rates, and then Donald Trump actually fighting back finally, something that we've needed to do for a while, because China has charged an imbalance of 360 or 76-ish billion is the imbalance from China with America. And Trump is finally starting to even the playing field. But there are always repercussions as a result of a trade war, which is exactly where we're headed. And maybe even later, who knows, World War III could come out of it. We just don't know where any of this is leading. But on today's broadcast, I wanted to bring an expert. So I brought on Colin Plume with noblegoldinvestments.com. So are you with me over there?
Yeah. Hey, Lisa, how are you doing?
I'm good. There is, like you heard me say a moment ago, there's so many things at play, and I wanted to bring you on because you guys have an expertise in the economic field, in gold, silver, precious metals, bitcoins, all these things you guys offer at the website. And tell me what's going on in the state of the world. Are we prepared? Are Americans even, what's going on? I guess let's start there.
Well, in that Bloomberg news article, it talks about they did a study and they basically tested people on a few basic questions about retirement and asked them, one of the questions was, is it better to buy a particular stock or a mutual fund? And people would respond, and they would find out how many people got those kind of questions right. And the percentages were really low in terms of people getting accurate responses to some basic financial questions, which I think is pretty unnerving. But the biggest one, the question that stumped people the most was inflation. That was the lowest amount of people got it right. And I think a lot of it's because we're on a fiat money system and people kind of forget about inflation. And also the government reports inflation erroneously. They just kind of fix that 2% here in the United States. And really, most people know inflation is much higher than that. So people really don't understand that inflation can hurt you at retirement. And that was the question. If the cost of goods go up over time, how is that going to affect your retirement? Most people didn't know the answer to that. And what it leads me to kind of remember is something that we've always kind of talked about. And when you look at our dollar, and it's just kind of a simple thing, you look at, like, for instance, a $20 bill, a $20 bill and a $20 gold piece 100 years ago were interchangeable. And with $20 100 years ago, you could actually, a gentleman could go out, he could buy a suit, a woman could go out and buy a handmade dress, they could take their spouse out to dinner or lunch, and they'd have a little money left over, surprisingly. Today, the dollar has dropped 96% of its value, and $20 really doesn't buy much of anything. However, if you look at gold, so this is a gold piece that we have here. If you look at gold over that same time period, has really held up over value. You can still buy a few suits for what gold is trading for today. You can go out to dinner and you can still have money in your pocket. So that has been able to keep up with inflation, which is a really important part of retirement. And that's why that article in Bloomberg said is that most people are not prepared or not even educated enough to understand what some of these basic principles are.
And that's why I think it's so important to bring you on. And that's why I partner with you guys. I call you guys one of my partners because that's what it is. I believe in it. I do it myself. And I want, I guess, the audience to be prepared also, because the feds, to raise that aggressively, this is some of the stuff that led to the 2007, 2008 crisis that we had. And this is the same pattern right now that we're witnessing. So it's very shaky ground, if you will. But not only that, but it just makes it more expensive to borrow. So if anybody's looking out to get a loan, you're going to be borrowing a lot more. Well, at least gold, silver, and you convert your 401ks to something solid, a Roth IRA. Hey, that's even better because your money is going to be more stable place where there's so much volatility with the dollar. Now the trade war, we brought this up in the beginning, but let me just break this down using my notes. We have China gets the original blow because they put us at the unfair advantage of $376 billion imbalance on our goods. This is something we've been paying for years. Well, Trump says no more. So he blows back and he says 25% on $50 billion worth of Chinese goods. So he says, hey, this is what we're going to do. And then China claims, uh-oh, you guys have launched a war. We're in a trade war with America. This is something their Chinese Commerce Center made the mention of. And then Trump says, okay, now we're going to hit you with 10% on $200 billion. Well, ultimately, I know you guys have an article there on your website. I'll toss that up real quick. But can you tell me what repercussions this kind of trade war will have on us?
Well, you mentioned already kind of interest rates going up. So you look at things that can ruin an economy, and the interest rates rising in 2008 was obviously a big reason that we had a lot of problems, coupled with the fact that the housing market was inflated. Well, guess what? We're in the same spot again. So that's one warning sign of the markets maybe being in turmoil. And interest rates are going to continue. The Fed today even said they're going to continue to raise interest rates. So you're going to see home mortgages above 5% in the next 3 to 6 months. They're already pretty close to that point. And really, that's going to make it that housing bubble kind of start to get a little shaky. In terms of the trade war, obviously, I think that in terms of protecting and putting America first, making us a priority and starting to talk about these tariffs is not something that any president has talked about since Reagan was in office. That was the last time really a president talked about tariffs. So I think he's laying some good groundwork, I think, for the future. But tariffs are a tricky element because you're looking at China, who holds more of our treasury bonds than they're supposed to. They hold, I think, about 32 or 33% of our U.S. treasury bonds. So we're in a sticky position. We really can't push back too hard on them because really they're holding our debt. And so that's sort of some of the things that's a little scary. If they were to dump our debt onto the market because of this tariff war and this trade war, our economy would be in shambles. So we have to be somewhat careful when we're talking about the trade war. I think we're going to go into a negotiation and things hopefully will work out okay. But I think that right now it's a sticky time to go after something so difficult, frankly.
Yeah, it is a very hard time and a difficult time. But that's why, again, I think now is the time to prepare your 401ks, prepare your retirement, prepare with bartering tools, these kinds of things, which you guys offer on, Noble Gold Investments. And you have the phone number as well. What is that number if people want to call and...
877-646-5347. They can get our inflation guide. They can get our gold IRA guide, our silver guide. And I will tell you, the theme in the markets right now, and we have a lot of clients that are stockbrokers that actually buy physical metals from us. They call us from New York and different places, and they want the physical metal, which is fascinating. And I have one client who's a big hedge fund manager, and when he gets some of his bonuses, he buys physical gold from us. But in my latest conversation with him is that the theme in the market right now is to protect your principal. PYP is the theme. And so that's why a lot of people are taking money off the table, getting it out of riskier type investments, and they're moving into assets that are kind of more stable and more secure, and that's why they're getting into physical gold and silver. Gold is still down. It's at a 6-month low right now. Silver is at rock bottom prices. So I think we're prepared to get into that bull run that a lot of people have been anticipating. And, there's never been a better time to buy low in the commodities market.
Absolutely. You want to buy when it's that lower rate. So that's a good thing. And just, I guess in conclusion, can you tell me what % of Americans you think are not prepared if we end up in some kind of financial crisis or trade war that gets into some uglier battle? What % do you think that is?
Well, I think that it's a pretty high number, mostly because most people's net worth is tied into two assets. It's tied in their home and it's tied into their 401k. And really, unfortunately, those two assets, you know, a home is not an investment. The home you live in is not an investment. I talk to people all the time. Unless you're going to sell your home and move somewhere that's, you know, substantially lower in value, if you're going to live in that place for the rest of your life, that's not something you're ever going to be able to sell or profit on. But the most people have their money in mutual funds in the stock market, and I talk to people all the time, and the brokers talk to people all the time. And here's the thing that people say: I don't understand, if everybody says the stock market's up 35% since Trump in his office, why is my account not up 35%? And that's because a lot of it is wrapped into these fees that are associated with 401ks. So even though it looks great on paper, you go to certain places and you see things, oh, it's up. Really, their portfolios are not up. Why? Or maybe they're up, but they're not up 35%. Maybe they're up 15 or 16%, and they don't understand it because a lot of it's wrapped up in those hidden fees. When you have a 401k, when you move into a self-directed IRA with us, everything in metals is a flat rate. So once you get the metals, you get it to the depository, the storage and the custodial fees are flat. So if you do, you know, 20 or 50,000 and it doubles or triples or quadruples in value, your fees don't go up. Whereas in a mutual fund, no matter where you are, you're getting fees charged every day. And as your portfolio grows, the fees are growing. So a lot of times people don't realize that they're paying, you know, anywhere from, you know, 1 to 3% of the value every year into fees, and that's what's eating into a lot of their profit.
Gotcha. That makes sense. And that's, again, I encourage everybody, make sure you're not in that. And I'm going to guess like 75%, maybe even higher than that. Don't go and make sure you're prepared with something. If not gold and silver, something. So you're staying solid. But all the information for Noble Gold is below. But keep in mind, we are running straight into that trade war with China. At the same time, we have the Federal Reserve aggressively raising those rates. Now, the long-term benefit is good on this trade war. The short-term benefit, we're going to see some turmoil. I think of how many products we have made by China. Thankfully, yours isn't made by China.
It's definitely not. And actually, to be honest, interest rates going up in the long term are probably somewhat good too, especially for first-time home buyers. You know, if it can get to a leveling point where, you know, someone can come in and be able to afford a home. I think home prices going up double digits every year is not a healthy way, because it just makes it unaffordable for regular people, and most of that value they're never going to really obtain anyway. So I think both the trade war and the interest rates are good in the long term, but in the short term we're going to see some problems that are going to be affected by just those two things. And then if you just look at anything else that could happen, any kind of looming war, you know, things are, you know, not in the best places in different parts of the world. We see anything like that happen, you know, if things don't go well with North Korea, which, you know, obviously they had a great meeting, but maybe things shake out and Kim Jong-un is not really prepared to give up his nuclear weapons. We could be in some kind of, situation with North Korea, because Trump has made it very clear that it's either denuclearization or kind of bust. So there's a number of factors that could affect the markets right now. And that's why, you know, we just talk about being diversified. You know, call us, get some free information. You know, people, and I think people find this all the time, that we're not going to pressure anybody. We'll call you, give you information, give you everything you need, and then ultimately, you know, you're going to decide if it's something for you.
Perfect. Well, thanks again, Colin, for coming on the broadcast. I appreciate taking time out of your day to spend with me here. And thank you guys again for listening to the broadcast. And below is all the information that you'll need for Noble Gold, and everything that we referenced today. All the links are there as well. Well, thanks again for tuning in. This is Lisa Haven, and that was Colin Plume signing out.